Okay, now MCQ number 23 again on capital gain. Here also we will be claiming exemption under section 54 as well as section 54 EC. The only difference is there are two different assessees involved here. One by one we'll be checking it out. Mr. Vishal and Mr. Guha sold their residential house property in Pune for rupees 3 crore and rupees 4 crore respectively. Vishal sold it for 4 crore, Vishal sold it for 3 crore, Guha sold it for 4 crore in January 23. That means in the current year. The house property was purchased by them 25 months back. 25 months back, that means more than 24 months. Therefore, it will be long term capital asset. The index cost of acquisition is 1 crore and 1.75 crore respectively. So, Vishal, it is 1 crore. For Guha, it is 1.75 crore. Mr. Vishal purchased two residential flats, one in Delhi and one in Agra, for rupees 70 lakhs and rupees 80 lakhs respectively in April 2023. January 23 they are selling, April 23 is buying. That means very much within the time limit of 1 year before or 2 years after. It is very much within 2 years after, and also before the due date of filing IT return. On the same date, Mr. Guha also purchased two residential flats, one in Mumbai, other one in Pune for rupees 80 lakhs and 75 lakhs. So Vishal purchased for 70 and 80. This guy purchased for 80 and 75 respectively. Both of them invested 30 lakhs in the bonds of Nahai in March 2023, that is within 6 months from January 23, and 30 lakh rupees worth of bonds of RECL, Rural Electrification Corporation, in April 23, again within 6 months from January 23, making them eligible to claim exemption under section 54 EC. However, 30 lakhs Nahai bonds and 30 lakh rupees RECL bonds totaling to 60 lakhs. Each of them have invested 60 lakh rupees but restricted to 50 lakhs. The exemption available under section 54 EC shall be restricted to 50 lakhs. You know pretty well. 50 lakh limit is not for RECL and NHAI bonds individually. It is 50 lakhs combined limit. What is the amount taxable under the capital gain for AY 23-24 in the hands of Mr. Vishal and Mr. Guha? So we'll be computing for both of them individually. Remember one thing, that in section 54, so here we'll be claiming exemption under 54 as well as under section 54 EC one by one. So 54 EC will be restricted to 50 lakh for both of them individually. As far as section 54 is concerned, both of them are buying two houses. Vishal is buying one in Delhi, one in Agra. Guha is buying one in Mumbai, one in Pune. However, whether exemption under section 54 can be claimed with regards to two houses or not, the answer is exemption is possible only with regards to any one of the houses. But if you remember, AY 2021 provisos were inserted, two provisos were inserted to section 54, stating that in case where the amount of LTCG does not exceed 2 crore, long term capital gain amount does not exceed 2 crore rupees, then instead of buying one house or constructing one house, at the option of the assessee may purchase or construct two residential houses in India and claim exemption on both of them. However, this is once in a lifetime benefit as per second proviso to section 54. But so we will have to check out of Vishal and Guha, in whose case the amount of LTCG is up to 2 crore. In case if the LTCG exceeds 2 crore, then exemption will have to be restricted to any one of the houses, and only where the amount of LTCG is up to 2 crore, exemption can be claimed with regards to both the houses. So one by one we'll be checking it out. Mr. Vishal, full value of sale consideration is 3 crore and index cost is 1 crore. LTCG thus will be 2 crore. And for Mr. Guha, he is selling one property, sale consideration is 4 crore. Vishal is selling for 3 crore, Guha is selling for 4 crore. And his index cost of acquisition is 175 lakhs. LTCG will be 2 crore 25 lakh. So for Mr. Vishal, he will be eligible for claiming exemption under section 54 with regards to two houses, both the houses, whereas Mr. Guha will be eligible with regards to exemption with regards to acquiring of only one house. Right? Okay. So let's first finish with section 54 before we move on to section 54 EC. Vishal is buying two houses, one for 70 lakh, another one for 80 lakhs. 70 and 80, whereas Guha is buying for 70 and 75. So as far as Vishal is concerned, first house he is buying for 70, second house for 80 lakh. He is eligible for both the houses totaling to 150 lakhs. LTCG, we will not be claiming LTCG right now, and then he is investing under 54 EC in Nahai bonds 30 lakhs, RECL bonds 30 lakhs, total 60 lakhs, restricted to 50 lakhs. So exemption under 54 EC will be 50. So LTCG will come down to nil. Taxable LTCG for Vishal will be nil, whereas for Mr. Guha, let's calculate it. For Guha, exemption, first house is buying for 80 lakhs, second house is buying for 75, but he can claim exemption for any one of them. Which one is beneficial? House 1 will be more beneficial, so his exemption under 54 will be 80 lakhs. And as far as 54 EC is concerned, he is also investing 60 lakhs in two types of bonds restricted to 50 lakhs. His exemption will be 130 lakhs. So taxable LTCG will be 95 lakhs. So nil and 95. So what are the options available? LTCG, 4 options: 70 and 95, 60 and 85, nil and 95, nil and 20. Answer is C, nil and 95, as we just calculated it out. Our answer is C. Let's check what's Institute's answer. Institute's answer is also C. Our answer is correct. With that, this MCQ comes to an end. See you in the next video with the next MCQ.